Hello, everyone, and once again, welcome to another Thursday night class. Today's topic, as you can see on the screen, is going to be about using runners effectively. So, for those of you that may not understand what the term runners mean, when you size heavier than just one contract in a position, or even when you buy shares of a company, it's basically the idea of not selling everything for profit at the same time, but trimming and or cutting half, selling majority of them and letting the rest be like a freelance, whatever happens, happens, aka a runner. When using runners, there's two different ways, maybe even three different ways people use them. You can just let them go free, and whatever happens, happens. They go minus 99% for a contract. You put a stop loss at break even. So you're basically locking in the fact that whatever happens, you're not going to lose money on the rest of the position, but you're also not going to make any money if the worst case scenario happens. So understanding when to basically let runners go, when to trim, there's not a distinct response or answer to the idea of like when's the best time to trim, when's the best time to sell my last runners. Just like everything that I've taught you guys, and I still try and keep in mind as I teach you guys, I want you to understand the process of no such thing of perfection or I got out right when I had to. That's never going to be the case if it keeps going in the direction that you need. If you sell a contract, let's say at 4.0 for an 100% gain, so your entry was a 2.0 and you let runners go. If you sell those runners, let's say at 8.0, and then the contract goes to 12.0 at the high, but then by the end of the day, it closes around, let's just say 3.0 area. So overall, your exit was perfect due to the result at the end of the day. In the moment, seeing the runner keep going, it can be like an emotional, unstable mindset you may have, thinking I should have held longer. I missed out on X amount of money. So I'm hoping as I talk about this topic and we go over a few examples and just like topic points as I scroll down, I can try and get into your guys' head the idea of understanding catching the top for a sell, catching the bottom for an entry. None of this is going to be possible. It happens. I'm not going to say it's always impossible, but the idea of consistency with this kind of, I'm going to sell my runner at the best place possible, you can't determine where the market's going. You also can't determine where it's going to end up at the end of the day compared to where it is intraday. So it's all about being content with what you can afford to lock in at that moment. So as I scroll down, I'm going to be just reading topics and we're going to talk about and discuss. And basically, if you guys have any questions on what I'm saying, please type them and I'll look back and I'll just see what's going on. One person just said, can you live trade tomorrow? I will definitely live trade tomorrow with you guys. I got you. I will definitely do that. So the first topic is learning to size correctly on a given portfolio size. Obviously, you guys understand what that means. If your portfolio is $500, how much do you size if your portfolio is only $500? If your portfolio is 5,000, what's the proper sizing for a $5,000 portfolio? So the hardest mental game is respecting proper sizing. And of course, I put like, why is that so difficult? Why is that the hardest mental game? So many people that have small accounts, they want to make money like someone that has a bigger account, or vice versa. Someone that has a big account, they're making little money, but they want to make more. So when you think about the process of how do you make more money, you have to risk more money. You can't just throw money in, still risking the same amount on the lighter side with a same percent gain or loss. If you're sizing $500 and you want a 10% loss, you're risking $50. If you size, let's say $5,000 and you want a $50 loss, you can't put a stop loss at 10% because the more money you're going in, the bigger the risk is going to have an effect on you. The money always correlates, the percent gains are going to follow. And I'm always going to bring up that little thing I say right there, that little slogan. So as I scroll down, your portfolio size can change the way you size. Like I was saying earlier, when someone has a smaller portfolio, the first thing that they want to do is make money. Obviously, everyone wants to make money when they trade, and I comprehend that. I get it. I've been in the same shoes. As you grow, as you understand the game, I'm not talking like just how to trade. I'm talking the game of trading, the mindset, the journey, the exposure of risk to reward. You start to understand that if you can't grow a small portfolio, once you get the money that you've always wanted, it's going to be very difficult to keep that money. Everything that you do from a $500 account to a $1,000 account to a $5,000 account to a 10,000, 100,000, everything correlates with sizing. So as I scroll down, what is proper sizing as we get into this topic? If you have a $500 portfolio, you only have $500 in your trading account. So many people, when they see this, and my recommendation when what is proper sizing, I personally am very heavy on 10% to 15% of your portfolio size. So if you have $500 in your portfolio, I'm going to use this example, and I'm going to put this in the center just so it looks more appealing. I'll make it bigger. When doing 10 to 15% sizing for your portfolio, using $500, the idea of a proper risk is a $50 position every time you go into a trade. When you have a small portfolio, it's very difficult to follow this, because when you break it down to the finance perspective of, if I only size 10%, that's $50. I can't make, let's just say, this is a possible reward that you can have, but I'm trying to be logical. You go in with $50, you're not expecting to make $200. It's possible, but it's not going to happen every time. A lot of the time when you size $50, it's like, I'm wasting my time. It's not worth it. Why am I doing this? So before I talk into that, like the depths of percent gains within the money you put in, I just want to go through all of these portfolio amounts and just show you what the proper sizing from what I personally recommend for people would be if you take 10 to 15%. Just to show you guys how, as you grow, your sizing stays the same percent wise, but the amount you put in grows. And as we do this, you'll start to realize why I'm just putting the amount first, and then we'll go back and talk about why I did this. Starting off with the $500 portfolio. Can we use 20% because most of the contracts are expensive? So I'm gonna get into that. You can use as much as you want. That's the best part about personal bias, personal sizing. You don't have to size what I'm telling you, but to last in this game, this is what I personally recommend, because if you size 10%, say you size $50 and you don't sell for a loss, you're just like, oh, it's only $50, I don't care. Okay, so in this position, when you do that, you're still left with $450. You took a 10% account loss on the day. That is still a good amount to have. But if you take that mental idea and tell yourself like, oh, I'm not worried, like whatever. So say you size 100, let's say $200, or let's say $250, just to make the percents easier, which is going to be 50% sizing. When you do this, many people, it's like, I have a small portfolio. I don't want to deal with all of this slow growth of only $50 sizing. If I lose it, yes, I'm not risking as much, but I want to make more money. Comprehending the sizing risk that comes with every position. When you size $250, if you only want to risk, let's say, a 20% loss, risking 20%, you're basically risking $50. I can find, there we go. So you're sizing 50% of your portfolio, which is $250. Your risk is only 20%, which is the original sizing that I personally recommend of $50. How many times, and this is like, you guys can answer this, type in the chat. How many times have you been down 30% in a trade and it goes back to green after selling for a loss? And I'm going to make these letters smaller just so it fits on the screen a little bit better. But I just want you to think about that. How many times have you been in a trade, you're down, like your risk is 20% loss, but you hold longer. At some point, you're down 30%, 40%. Oh, I can't handle this. I have to get out. And then within an hour, maybe even within a few minutes, the trade's right back to break even. Then it's up 10% if you would have held. How many times has this happened to you guys? And most of you guys are saying like it happens not every time, but majority of the time that does happen. I sell, it goes back to green. The comprehension of sizing light sucks in the moment. But when a situation like this happens that I currently have highlighted on the screen, that's when the realization of, man, if I would have sized lighter, I wouldn't have that emotional thought of, I got to get out because I'm risking too much for my size that I took. I know I oversized. I know I can't hold longer. I have to get out. And then after that loss, the trade goes right back to positive, possibly even 100% if you just would have held through the red and trusted the chart and whatnot. That is why I recommend to people, even if you just start out with this, learn how to size light and let the chart do the work for you. Proper sizing sucks. Trust me, I 100% understand. It's horrible, not from a standpoint of like, I'm not succeeding, but the idea of making, let's say you sell this $50 position at 20% gains. It's like, what the heck is an extra $10 going to do for me? Not realizing making $10, that's a 2% gain for your portfolio. It's not a lot. I get that, but think about the growth with that moving forward. Let's move down to our next example of an $1,000 account. You're sizing proper, $100. We're going to use the same example with all of these. I'll change it up as we get to the bigger money, just so you guys can see why so many people, when they have a small portfolio and they hit big for the first time and they touch money like they've never had in a portfolio before, let's say $5,000, they start thinking, oh, I can size $1,000 and just not care. I'll still have 4,000 left. Not realizing your losses don't determine where you're going to go to. It's your sizing. Can you handle being in the red? Can you actually hold and not be worried about, oh, I'm going to lose X amount of my portfolio. I can't handle this. I got to get out before it's too late. Maybe not even realizing the chart is still in your favor. So if you lose $100, which is a 10% size now, notice how as you make money, the money is correlating, but the percent gains are always going to correlate. 10%, $100, because you're now at a $1,000 portfolio amount. So if you lose that whole 100, you're down to $900. That's still 400 more than the quote unquote, I started at $500. $100, if you keep the mindset of that risk of light, this loss will not affect you. Yes, it's $100, but the percent gains correlate. Does that make sense to you guys? The money's going to follow. As you get bigger portfolio, the money follows you and gets bigger if you size the same way every time. The percent gains are never going to change for a loss, for a win, whatever the case scenario may be. So when you size, and we're going to do the same thing, let's say 50% of your account, you size $500. Oh, I have 1,000. I'm up 100% from my starting amount of $500. I'm going to risk what I started with, because if I'm wrong, I'm basically back to where I started. It's not that big of a deal. That's the first mistake right there. You're going in with no care, no idea of, man, then I'll have to grow it all back. Am I really going to want to size $50 again? I went through all that trouble of growing my account that I can actually size 100 respectfully. You're not sizing 100 because you can now. You're doing it because you're following the same plan from when you were sizing $50. You're rewarding yourself by sizing the same, but you're given more of an opportunity to make more off of the same percent sizing. So when you go in with $500, obviously you know the risk of the total portfolio to the sizing. So I'm not going to type like that 50% or whatever. Say you only risk, let's say you hold it a little bit longer. Let's give it some room. Let's say you hold it down 50%. Tell me how hard it would be for you to say, I'm going to keep holding because, oh, it's only 250. Or maybe you're thinking, I'm down 250. I need to get out right now because I can't afford to lose that much money. Just like before, how many of you guys have been down this much, you sell, and it goes back to even break even? Even break even. It sucks. It's horrible because the idea of I just sold for a $250 loss. Now my account's back to $750. And if I would have held longer, I could have at least gotten out and break even and act like the trade never happened. That's happened to me. Even in today's day, this happens to me all the time. I'm down 60%, 70%. I size for this right here. The idea that I know I can hold this to zero and I size for it, but I'll still sell for an 80% loss, 70% loss. A few hours later, or maybe even the next day, if I'm playing like a 2-week expiration, that contract's back to break even. And I got myself scared out of a position, even though I sized proper. So I go back and I tell myself, did I size too heavy? Is 10% for that kind of position, whether it's a swing or a day trade, do I need to lower my sizing just so my emotions don't make me get out when I am expecting minus 99%? When this kind of situation happens and you sell, it goes back to green, a lot of people, it's like, I got to size heavier next time. And when I'm red, I'm not going to sell because it may come back to green. I'll just get out break even. And the one time it doesn't happen, you're done. Like your account is losing however much you size because you size for zero. Come on. 750. So once again, I'm going to scroll down. I don't think you guys really need an example for the 2,500. I think that's pretty self-explanatory. So I'm going to move quickly down to the 5,000 just because I know a lot of people, when you say, give us an example, it's either $1,000, 5,000, 10,000. If you want me to go back at the end and give an example for this, I will. But I think these two account sizes, many people, when they hit this point in their career, they can never grow past it. And it's happened to me multiple times, 5,000 to 10,000. That's like a golden number for some reason. And I don't know if it's like a psychological thing of like when you're at 9,000, at 8,000, you just want to hit 10,000 so bad. You're only focused on the money you can make or lose to keep yourself within that range. You're not focused on, I'm just going to play the chart like I was back here, where when I got $500 to an $1,000 portfolio, and then to a 2,500, and then to a 5,000. Everything you do is the exact same repetition, rotation, everything's the same. So when you're sizing properly, obviously $500, using this sizing, think back to this right here. You have the opportunity to size a 10% on a 5,000 portfolio. You're basically full porting a $500 portfolio at this point in your career. Why would you want to size more than 500? Like honestly, truly think about that real quick. I know so many people that I've tried helping. They're down to their last few hundred, maybe even $1,000. They hit big on a lucky play and they know it's luck. They don't think like, oh, I'm the best trader ever. They know they got lucky. And they think they deserve the size 2,000 after not even having that much total in their account or sizing even $1,500, $1,000. Why would you not be pleased with sizing 500 properly when at one point you were in this position, or even in $1,000 position, $1,000 in your portfolio? This is a blessing, because if you lose this money, think about how much you still have left over. You're still at 4,500. And at this point, I don't think anyone would hold $500 down to minus 99%. So you may even size less than 10% at this point, maybe $200, $300, which gives you even more room to hold a trade. Let me see what question is saying. Entry to me is everything. I can't hang in trades that long. I said a stop as soon as I enter at this point. And Chris, that's perfect. A lot of people will tell you, why don't you let the trade work out? From what you just said, what I grasped from that, from you as a person, you would rather enter and let the chart take you out than you have to sit there and make that mental choice of, do I want to get out now? Do I want to hold and see if it comes back? You just want to get the hell out, which is emotionless, which is the best part. A lot of people, they want to feel emotions in a trade, so they try and oversize. They try and hold longer because they don't want to take that, oh, I'm going to lose if I sell right here. You're accepting the fact, if I lose, it's like, I'm not losing money. I'm just losing what I prepared for, and I'll just come back tomorrow. Every system loses. I think a lot of people fall off of that. I can attest the proper sizing on a small account. You really got to be patient. I've been stuck around $1,000 account for a year now, never really had much above or below. The fact that you have been around 1,000 when some people can't even keep an account, let that just, I don't want to say a confidence boost, but that's why I usually tell people, when some, like today was a day where it's like, I didn't trade, like it sucks. Some people lost their portfolio, or they forced a trade that made them lose. The fact that you didn't trade, the fact you have the same amount of money tomorrow that you had today, clear mindset. You had no loss, no win. There's no emotions for tomorrow. You just can't remember what happened today that you missed out on and expect the same move to happen. Like, I'm going to enter and I'm not selling, because if it does happen, I have to catch it today. Don't let the past affect future judgment, because end of the day, when that happens, and I'm sure a lot of you have been in the situation, because I have, I'm speaking on past experience. I've been up 300%, 400%, and I'm not selling, because the day before I missed out on 10,000% or 2,000% gains. The fact that you're up that heavy, when you be content with a 10% win or a 20% win, realize that you're not guaranteed or promised anything when you show up every day. So you have to take those base hits. And as you get a bigger portfolio, you can size like you always wanted to with an $1,000 portfolio or a $500 portfolio. This is your quote unquote dream full port to make it go big. So don't oversize. It takes that long to get to this point. Why do you want to just throw it away and just hope to make quicker money when you never deserved it in the first place? That's the hardest mental game about all this. You buying experience with breaking perspective, same boat except with a little bigger portfolio. Same situation here. A lot of you guys are saying you've been in the same spot for a year now. There's ways to fix that, and I hope to somehow help you guys. Never really get much above or below. Didn't someone full port their 4K? Someone did go pretty heavy today, and they sold for a major loss. What are your thoughts on full porting small port with super tight stop loss and A+ setup? So that question is perfect. That actually is coming on later. So let me finish these two examples, and I will definitely get into that, Mr. Trades. The idea, he said, is full porting basically okay for a smaller portfolio if you have a tight stop loss? And I will definitely touch on that in a second. So going back to proper sizing on a $5,000 portfolio, don't think about only sizing 500 on a $5,000 portfolio. Focus on the fact of what you always wanted to size years ago, or even a few weeks ago when you just had a magically huge trade. Now you have more to offer. You could size $500. Oh, I'll type this in better. Let's say 50% gain. How would you guys feel? Forget about how much your portfolio is. I'm actually going to hide the color of this text real quick. Imagine you just size $500. I don't care what your portfolio size is, 10,000, 100,000, $500 going full port. You're up 50% and you sell. You just made $250. How would that make you feel? I don't care what your port is. Think about your financial situation, where you are in life. The fact that, let's say you made this money in 2 hours. You held a position for 2 hours. You just made $250. How would that make you feel? The idea of making $250, sizing $500, or even just the idea I made $250 today. Forget about how much you sized, how much your portfolio is. Truly, how would that make you feel? It's a day's salary for some people. That's the right mindset right there. Amazing. That's great. I'm selling 250 is good enough for me. Okay, so taking that, and Mr. Trades, this will slowly come back into, is it okay to full port if I only have X amount in my portfolio? Let's take this back a step now. I'm just gonna say 10 out of 10 pleased for this kind of sell. Now let's take this back up. Let's say the $1,000 account. And I want honesty with you guys. I will, Elson, don't get me started. Dave's Chicken, sponsor me. Okay, so listen, $1,000 account, $500 account. Let's say you full port $500, and that's all you have left. A lot of people, it's fine to go heavy, but you need to have a stop loss that you are content with. I will repeat that one more time. You can size heavy or full port if you have a stop loss or a risk you are content with. The reason I repeated that again, many people will say, don't ever full port. If you are content with the results, be my guest. But I don't want to hear pouting. I don't want to hear crying. Oh, I should have never done that. If you have regrets from what you processed before entering, you were not thinking correctly. So going back to the example we just gave with $250 in a day, if you full ported $500 and that's all you have, would you sell at 50%? Truly think about that. Would you sell at 50%? A lot of people, it's like, I don't want to sell unless I'm up 200%. A lot of you just said that's a day's work for some people. I'd be blessed to make $250. If you size that heavy, what is your risk though? If you're selling for, let's say, a 10% gain, which is going to be $50, is your risk only going to be 10% loss? So you're risking a 1-to-1. That's basically saying if you hit 5 trades, but you lose 5 trades, you're not making no headway. You're not moving forward. You're just risking a lot, giving yourself a heart attack. You're sweating, you're emotional. That's when the idea of I need a better risk reward. If the chart setup presents an amazing opportunity, you can size heavy if you accept what the consequences will give you. You could blow your portfolio. And Mo just said 20% loss. If you're going for a 50% gain and a 20% loss, that's perfect, because for every 2 losses you have, sizing 500, 1 win will put you in the green. 1 win will put you in the green. So let's do a little quick math on that. if we size, let's just say 20% loss, stop loss, 50% gain, profits. That's a 1 to 2 basically. I mean 1 to 2.5, 1 to 2.33, whatever you want to call it. But for basically for every 2 losses, 1 win, you're profitable. Just think about that, you guys. I know so many people, they're up 40%, 50%. They never went red major after entering. Why would you want to just say, oh, it's only 40%, I don't want to get out yet? The best part about that, and I'm actually going to skip over the $10,000 because this is a good transition for me. I'll come back to it if we have time. Understanding how to trim and when to adjust. This example right here is what I'm going to bring down into what we're about to talk about. So I'm going to bring this down. I'm going to put in between these two right here. So trimming is all personal preference. A lot of people, and I get this question more than you guys may even imagine, when do you trim? How do you know when trimming is best? How are you content when you trim for 100% gain, but the contract keeps going to 500%? How can you cope with that? How are you not upset? How do you come back and not let that affect you? The idea of trimming, you are content with what you're taking. You're not selling because, oh, I don't want to miss out on the gains. I just want to take small profit. For me, when I trim, I'm always putting a stop loss after trimming. And why do I do that? A lot of people are like, well, what if the stop loss gets hit and then it goes back into higher profits? Okay, so what? So what if I manage my risk and I get stopped out? So what if I get my stop loss gets hit and it goes up another 200%? I put the stop loss in processing. If this hits, yes, it can keep going, but I don't want to risk losing money if I can manage it. The whole idea of trading is long term. One day is not going to make you, but it's going to break you. I'm going to say that again. One day is not going to make you, but it will break you. I put in stop losses only because it takes away my emotions and it sells for me based off the chart, not based off my emotional standpoint. Oh, I don't want to sell when I was up 100% and now I'm only up 20. I want to see if I can get back to 50%. Oh, now I'm down 10%. I don't want to sell at least until I'm back to break even. Okay, you get back to break even. I don't want to sell at least until I'm green now. That indecisive, you're not trading. You are hoping for a new result that you are not prepared for. So when I'm up, let's just say I enter a trade that's $500 and I sell at 50%. I'm going to take all this stuff down. I don't like those things. There we go. So say I sell for 50%, but only half the position. So I'm going just off money amounts, not like amount of contracts. So I trim $250. I still have $250 in the trade. This is the question I get all the time. Where do I put the stop loss now? I just sold for 50% gains. Where do I put my stop loss? The question I tell everyone right back. Where are you most content if it hits? The fact of you just locked in, let's just say now for correlation wise, you sell 50% of this. Let's say you locked in. I'm just going to say $125. You just locked in 125. If I put a stop loss, I got to capitalize that I. Does this make sense to everybody? I'm going to make this bolder and bigger just so you can see it, and I'm going to underline it. If I put a stop loss at break even for the remainder of my position, I am guaranteed $125 no matter what possibly happens. If I sell the whole position right at 50%, I'm guaranteed $250 no matter what, but I don't have runners. So what if that mindset of, man, I should have left a few, it kept going, it's up 100% now. As it goes up, when do I sell more? How do you move the stop loss? For me, I'm very content with leaving the stop loss at break even, no matter how high the percent gains go, only because I'm locking in what I'm content with. $125 in a day. How many of you would be like, say you're sized in, you sell and you lock in $125, you put a stop loss at break even, meaning the worst case scenario, you just made $125. How many of you are honestly content with that? The fact of I could have sold everything for $250, but I'm guaranteed $125 if the worst case scenario happens. Would you be scared to let that $125 go and risk making $250 total? That's the risk you have to think about. Where do you want to put the stop loss? Not where would I put it? I'm fine with losing the whole position back to break even, and I'm only getting what I locked in. Some people, it's like, well, I want to lock in more, so I'm going to put my stop loss at 20%. Okay, well, if it goes, say it hits your stop loss at 20% and it goes to break even, then it shoots right back to 100% gains. Are you going to be upset? A lot of people, it's like, well, yeah, I'd be upset. So how do I avoid that? You don't use a stop loss. So now look at the effect of, okay, it goes to break even, down 20%, down 50%. Once that 50% hits where you already trimmed the first half, your whole trade's at break even now. You lost 125. So when I tell people the idea, I put a stop loss where I'm guaranteed to make what I locked in. Anything less is not possible. If you want to put a stop loss at 30% gains, 25% gains, you understand the fact of I could get stopped out. It could go down to 10% gains and push right back up. I like it at break even only because when I lock this in, I'm fine with it. If I sell at 50% gains and it goes to 60%, I can sell the rest of my trade at any point. I can even sell it as it falls back, 40%, 30%. If you can handle that, be my guest. But I know so many people, they'll put a stop loss at like 40% when they trimmed at 50. One little tick, you get out and it bounces right back. And then they're asking me, like, how do I avoid that? Well, why'd you put a stop loss so tight? And they just tell me I didn't want to risk losing money. Okay, well, just sell the whole position at 50% and just move on to the next trade. Don't put that stress on, man, I should have never put a stop loss. I wish I was still in. You may end up chasing what you should still be in with runners anyways. So scrolling down, adjusting during a trade based off levels. I am basically going to switch over to a chart, which I hope loads pretty quick. And I'm sure you guys will be able to see my chart right when it pops up. The idea of adjusting a trade for a stop loss, for the idea of should I still be holding, should I sell, what's my best option here? That's when you're going to have to comprehend. Hopefully it loads. There we go. I'm just using the first chart I have up. We're using Chevron. If you guys are upset with that, I apologize. Let me know if you can see my chart, if that's okay. And I'll answer a few questions you guys are typing. I have a quick question, bro. If I have a risk of 20% loss and I have 3 contracts, can I trim the first one at 15, 20% and leave the third as a runner? Whatever you are pleased with, Mo. You can sell all 3 at 15%. You can sell one at 15%. On a pullback, sell one at 5%, leave the last one for a break-even stop loss. You just have to do what you're content with. You can't have regrets if a stop loss gets hit. You can't have regrets of I was up 20%, now I'm at break even. I should have sold at 20%. The whole idea of having extra contracts is to lock in profits along the way. It's like leaving footprints in the snow. If you don't move forward, you're not going to leave any footprints. If you don't move forward in the trade, aka have a bigger profit, you're up 10%, 20%, you have no room to put a stop loss in unless you take a step back, meaning you're in the negatives. So I always trim along the way. That's why I prefer sizing more contracts, same size, because I can trim profits as it moves. So I'm going to just do a quick example with Chevron. I'm going to scroll down and see what are their questions. I personally take 250 at this point. Chris, if that's what you're content with, because I feel like you're the type to not regret missing out on a move. You just want to make money and get out for the day. Consistent gains will build up. Elson said $125, 2 to 3 times a week is not that bad starting off. That's perfect. A lot of people don't make that much in a day at a job. I've accepted even 100 plus in a single trade is great. Could be slow tape day. $100 a day, 500 a week, 2,000 a month, 24,000 a year. Some people barely make that in a year, and that as side income, 24,000 extra dollars in a year. That is huge for some people that they would die to have that. In fact, especially if the price is not going in your favor in respected time. If price is not in your favor, you can sell whenever you want to. That's the best part. I get too mad when I let trades come back down and don't lock in profits. Exactly. I'm liking you, Chris. The way you're thinking is what I got into, and I've had minimal red days, minimal losses. My account barely has drawbacks. That's the best part about locking in profits. Your thoughts on news like BOJ announcement? Will charts work then? So for me, with major news announcements, I try not to rely on news to trade, and I also only use like the major levels when news is released. So when I say major levels, just for an example on Chevron, I'm not saying this is like, oh, Chevron's going to have this happen. Imagine this is a chart for like SPX or SPY. I would use the major levels. If a news pushes it up, I'm looking for a reject at a main level, not any of this wick stuff right here. The main top, like this is like, if this breaks, we're sending. I know I'm not like zoomed out all the way, but just the idea, the main level. If we're up here at this purple highlight and the news is bad, I'm looking for a main bounce, not the yellow one, the orange one, the main bounce where logically this should push, not just like, oh, the first level's here. That's where the news should make it bounce. I'm going off the major levels when there's a news release because that's what I'm focused on. Majority of the time, levels don't respect news, but if you follow the like bigger picture, they tend to react pretty in sync. But that's not a good RR. Is there really such thing as a good RR if you're 10 for 10 on trades that you take it 20%? This is an example I like to give. If you journal your trades, and let's say 9 out of 10 trades, they at least hit minimum 20% gains, or let's say maximum they hit 20%. If you knew that after taking 50 trades, out of all those 50 trades, 5 of those trades do not hit 20% gains, would you lock in those other 45 at 20% or just hope it keeps going higher when they probably won't do that? If you know that from your historical entries on trades, I would just take 20% every day. Because if you size $500, that's $100 a day. You're risking 5 out of those 50 to not work. As you size $1,000, hitting 20%, you just made $200. Sizing 5,000, you just made $1,000. That's the long-term mindset I like to have. If you know, okay, out of every 10 trades, 9 of them go at least 20%. Why not just take that and let your win rate do the talking for you? Because if you understand, like, okay, I can lock that in, risk reward's not that big of an issue if I just lock in the gains, what I know I can do based off my journaling that I take. Facts, I need to make 500K weekly. I hope trading's around 50 trade. I tell people this about trading. Unless our economy totally, like the United States is no longer in existence, there's no more trading, which I don't think is ever going to happen. I mean, cross fingers, knock on wood, but until our US is demolished, the market is always going to be here. It's always going to be available. Always, always. Okay, so going off levels with stops. When I'm trading, obviously contracts, the more they consolidate, contracts lose value. This is when I like to use in the moment levels. And I'm just going to use the 2 hour right here for the orange and the yellow. Let's say you're swinging. Obviously, if you're day trading, imagine this movement is on a 2-minute candle frame. And actually, let's just do the day of. I'll just move these levels around. Okay, so we have a double reject here, basically a double top, fake out on top, basically contested, pre-market high and rejected. Same zone, not the dead on level, but you get the idea. So when using this kind of stuff, when I adjust my levels from a mental perspective, or like, oh, I entered here and I sold here, where should I put my stop loss? Hypothetically, you're not going to buy at the bottom for calls. Let's say you enter calls around this area. We'll make that orange. Orange is entry. Red is sell points. You have this level on the orange around 161.5 area. Let's say you sell when that gets contested. So at that point, your thought process is, where's my stop loss? Do you want to just go off the chart and make your entry point your stop loss? Do you want to think, okay, if I look at the actual contract price from when I entered, let's just say you were up 50% on this push. You're up 50% on this push right here. You trim for 50%. If you put a stop loss at 40%, you better believe a pullback like this is going to stop you out. Maybe even a 20% stop loss, or even a 10% stop loss possibly. If you add more time, this pullback won't affect you as much. But that's where you have to comprehend the idea of charts and pullbacks based off your entry. If you entered at the very bottom, this pullback may not get you out if you have a break-even stop loss. But if you entered like on the push on the upcoming, this pullback at break-even may get you out. So that's when, okay, the chart is this, I entered at this level. Where is a good correlation of, okay, if it pulls back to my entry and I have a stop loss at break-even, I'm more than likely going to get hit. So I'm risking my entry point for that stop loss. Or do you want to be a little bit risky conviction wise? This is a heavy level. If it breaks low on the day, I'll take a 20% loss. I'll put a stop loss at 10% loss. That's where personal bias comes into play. A lot of people can't calculate this. That's fine. But if you have to, just do a stop in the moment with mental. I'm going to sell if low on the day breaks. I don't care if it's just a wick. Right when that wick's under, I'm selling market. I'm getting out. Or are you content with just saying, okay, this push I trimmed at 50%. I'll adjust. My entry's here. If we pull back to my entry, I'm more than likely going to get out at break even. So I'm content with a stop loss at break even, because if that pulls back to my entry, I deserve to get stopped out because continuation did not keep the momentum upside. If you do get stopped out, would you be upset that this pushed up higher? If you do, you need to find a center ground for you personally. Are you content with a stop loss? Do you want to risk losing money that could keep pushing to the downside? Or do you just want to put a stop loss in? Just tell yourself, if it gets hit, I already locked in a 50% gain. AKA, going back to this example, I just locked in $125, stop loss at break even. If it happens, I'm guaranteed $125. If that stop loss doesn't hit, I can sell at any point as this trend pushes back to the upside. That is what you have to figure out from a personal standpoint. I can't tell you what to do, because what I do, not many people can handle. I don't chase. I don't trade breakouts. I don't, like, if I'm in a trade, I sell and it keeps going, I'm not upset that I'm not in still. I'm at that point in my trading career where I just want to make money and be done. If I'm up $500 and I still have $8,000 of buying power, I'm not going to keep trying to trade because I have money to spend. If you have money in the bank, go spend it right now. You know you have bills next week. You know you have to do something in a month from now for a car payment or something. Why would you spend money you know you need? Why would you spend money when you're already up $500? You don't have to trade. You need to keep that discipline strong. And that's where I use levels. Am I content with a possible break even? Do I want to risk it and see if it pushes back up so my stop loss doesn't get hit? You have to do deep diving into who you are as a person. That is what I personally recommend when going off chart setups, for the idea of how do I do it based off the levels. You have to figure that out for you. I can't tell you. I'm going to see what you guys are saying real quick. Will AI take over trading? AI has already taken over trading. If you don't believe that, look it up. Hedge funds, Wall Street, banks, computers trade. That's literally what happens, bro. That is why when I teach people, I tell them, think like a computer. Don't have emotions. Trade levels. When retail is fearful, you buy in. When retail is overhyped, you sit back and wait. You don't want to trade like retail, because that's how these computers, they win every time. They trade with no emotion. You have to hit that light switch to keep the emotions tuned off when you are trading, because you are trading a chart. You are trading levels. You're trading algos the entire day. Market makers, they all use high frequency trading. I don't know if you want to consider AI trading. I like to consider AI only because it's computers. That's just how I look at it. Everything's based off levels, technology based off like the coding of buyers and sellers, liquidity grabs, all these high-tech terms. Computers do the high key work. They go off specific levels. They know when to buy in based off this entry point, etc., etc. So appreciating a stop loss and trusting. Stop losses restrict major losses or any losses at all. This is a very, very key statement many people don't want to confront and figure out, is this what I need to do? Is this what I have to follow? Stop losses restrict losses. It also takes away emotions. If you can't handle a stop loss getting hit and it runs even higher after you're out, you are trading for the wrong reason. You are just trying to make money that the chart may not want to give you, and you'll have to hold through red if you want to deal with that emotional strain. I personally don't want to deal with that, because if I sell for a purpose, say I lock in, let's say $125, I could have locked in the whole position and made 250, but I'm going to do 125. If you get upset at a stop loss getting hit at break even, oh, I could have sold all for 250 bucks. Do that next time. But don't be upset when you sell and then it keeps running. That is where you have to comprehend the fact of you're trading for money, not realizing the chart gives you every result. Every entry point the chart gives you, every exit the chart should give you. That's how you have to trade. If you want to trade based off, oh, I'm up 20%, I got to get out, that's fine, but you can't think after the move keeps moving, oh my gosh, if I would have held, I'd be up 50%. You are hoping. You're basically saying, I'm going to hold next time because 20% is not enough for me. What if that next trade only goes 25, pulls back to break even? Man, I should have sold it 25%. I had it, I didn't take it. That's why I tell people, take those base hits. If out of every 10 trades, 9 of those have a chance for you to sell 20%, just take it. 9 out of 10 times you're making 20%. That is pretty good odds if you ask me, looking 5 years down the road, even a year down the road. Trusting is putting faith in your system, not hopeful gains. I kind of just talked on that, so I'm not going to repeat it too much. But the idea of what you're trusting in trading is what you don't see. It's a system, which is you putting the work in to make it happen. The idea of a lot of people, it's like they trade for the money, whatever happens, happens. I'll live with it. If you have a system, like what Mo was saying earlier, the risk to reward, if I'm selling for 20%, my risk is only 20, that's a 1-to-1, like that's not very good. If you're selling 9 out of 10 trades at 20% gains, does a risk to reward really matter when your hit rate's that good? I'm not saying a win rate, just the idea of I'm up 20% in 9 out of 10 trades. That's pretty good odds if you ask me. If you want to make your system better, put the loss to 10%. But how many times do your trade maybe drop down to 15%, but they go back to 20%? Tracking how low a contract went when you're in it compared to how high the contract goes, maybe even after you sell it. Tracking the idea of the fluctuation of the contract price, it gives you an idea of where your best trades are. A lot of people, they enter perfect. Their trades go maximum 50%. 9 out of 10 times they hit 50%. So they know, oh, I can sell at 30, 40. I'm guaranteed 9 out of 10 to hit 50% if I stick to my system of proper entries. Risk to reward matters, but when your hit rate is that good and you limit your losses, you follow, I'm going to sell at 20% loss. You are putting yourself into a system and not the idea of, I'm red, I'm going to hold to get back to green at least. That's not a system. You're not even looking at what the chart may offer you. You're putting your faith in something you can't see. Hopeful gains. You would rather have money over a guaranteed system that you know works for who you are as a trader. And that's what I hope that you guys possibly took away from this at the very end. That is the last thing I'm going to talk about, and we do have a few more minutes, so I'm going to take any questions possibly you guys have, and we'll see what you guys come up with. You don't know where the price will go, doesn't make sense to hold. That's a big thing right there. It's not a question, but the statement right there. You don't know where the price is going. You could enter every trade and it goes red and never goes green. When are you going to sell for a loss? I'm always preparing myself for the loss, no matter what happens. Because if I'm in the green, I have nothing to worry about except, okay, on the pullback, where is the level that I have to watch for to hold? And if it doesn't hold, where am I going to sell if it goes the wrong direction on me? I love preparing for the downside because the hype of a loss is way worse than the hype for a green. If you're hyping the red, like, oh, this could go back to green, I'm not going to worry about it, you're not going to follow a system because you're focused on, I'm red, I'm going to take a losing trade. I prepare for that so that I'm not freaking out when it does happen, if it does. That way my losses are always minimal because that's all I'm prepared for. Do you guys have any questions whatsoever? Any statements about the topic? I know there's a few things you guys asked earlier that I said I'd speak on afterwards, so we can get into that if we need to. But I just want to answer any topics from tonight you guys may. That was fast. This was a whole hour, bro. That was a whole hour. If you guys have no questions about the topic, just say we're good. and I can get this recording paused and get this uploaded as soon as possible. I got a few people saying GG. Let me pause this.